All right, let's talk Pediatrix. The company just dropped a Q2 earnings report that absolutely stunned the market. I mean, they didn't just beat Wall Street's expectations, they blew them out of the water, signaling that their big turnaround story isn't just happening, it's hitting the accelerator. So let's dive right in. So, here's how we're going to break this all down. First, we'll cover the headline numbers and that huge stock pop. Then, we're going to look under the hood to see what's really driving the business. After that, we'll walk through management's game plan, their updated outlook, and finally, we'll wrap up with our take on what to watch for next. First up, let's get right to the results that made everyone sit up and pay attention. This wasn't just a good quarter, this was a statement quarter. It showed the engine is really firing. The big number, the one that really tells the story, is adjusted earnings per share. It came in at a super strong 53 cents. Honestly, everything else this quarter builds on this one number right here. But here's why that 53 cents is such a big deal. It wasn't just a squeaker. It was a massive 26% beat over what analysts were expecting. The street thought they'd do around 42 cents. So yeah, nobody saw this level of performance coming. And look, this wasn't just some fancy accounting on the bottom line. The strength was everywhere. Revenue also came in higher than expected, which proves there was real, fundamental power in their day-to-day operations. So how did the market react? Well, it was swift and it was decisive. While the rest of the healthcare sector kind of treaded water, Pediatrix stock just exploded, rallying almost 17% in the days after the announcement on massive volume. Folks, that is what a clean beat and raise looks like. Okay, so that's the what. Now for the why. How in the world did they pull this off? Let's get under the hood, because if you only look at the surface, the numbers can actually be a little misleading. Okay, you really got to pay attention to this slide because it tells the entire story. On the one hand, headline revenue was actually down 7%. Why? Because they've been selling off parts of the business that weren't core. But the business that's left, the core stuff, it is absolutely thriving. Same unit revenue was up a massive 6.4%. This is their whole smaller but healthier strategy playing out in real time. And just to be super clear about what we mean by same unit growth, it basically cuts out all the noise from buying or selling assets. It gives you the purest look at the organic health of the business they're actually trying to grow for the long haul. It's a critical metric for a turnaround story like this. So when you peel back the onion on that growth, what do you find? You see their main neonatology business is just roaring back to life. NICU days were up 6%. Overall volumes were up almost 3%, and they were able to get better pricing. All of that while keeping their mix of patients and insurance payers nice and stable. It's just a picture of a super healthy core. A turnaround this clean doesn't just happen by luck. This is the direct result of a very clear, very deliberate plan from the leadership team. So let's take a look at the playbook they've been running. And their playbook is pretty classic, but man, is it effective. It's a simple three-pronged attack. First, clean up the portfolio and sell what doesn't fit. Second, make the remaining business run leaner and meaner. And third, now that the business is gushing cash, start giving that capital back to the owners of the company, the shareholders. And the foundation for this whole thing? Financial discipline. The CEO, Mark Orden, has been hammering this point home forever. He says having a rock-solid balance sheet, especially now, gives you a massive advantage. And listen, he's not just saying that for the conference call. The numbers prove it. I mean, they ended the quarter with nearly $225 million in cash and a net leverage ratio of just 1.5 times. That's a fortress balance sheet, and it gives them a ton of flexibility. So what do you do with a balance sheet that strong and a stock you think is cheap? You reward your shareholders. The board just authorized a huge new $250 million share buyback plan. This is a massive vote of confidence from management about the future. Okay, so the quarter was a home run, no doubt. But what about the future? Let's shift gears and talk about management's new guidance and, some of the risks that are still out there. And this is the part investors love to see. They didn't just beat the quarter, they raised the bar for the whole year. They jacked up their full-year forecast for adjusted EBITDA, which basically tells the market, hey, that strength you just saw, that wasn't a fluke. Get used to it. But it wasn't all smooth sailing on the call. There was one big question on everyone's mind about a major piece of healthcare legislation, one the CEO jokingly called the big,
beautiful bill and what it could mean for their business.
And management's answer was really a masterclass in calming investor nerves. They broke it down into 4 points. The impact will be gradual, not sudden. Most of their business is in states where the effect is smaller. The law itself has specific protections for their patients. And bottom line, they're confident they can handle it. They basically put a huge concern to rest. All right, let's put it all together. The huge beat, the strong core, the smart strategy, and the confident outlook. What's our final verdict? What should we be looking for in the next earnings call? So here's our call. We think the operational strength is going to continue, but the year-over-year comparisons are about to get a lot tougher. So the things we'll be watching are, can they hit their new, higher numbers? Do those NICU volumes stay strong? And maybe most importantly, how quickly do they start spending that $250 million buying back stock? So, with all that said, our rating on Pediatrix is a confident outperform. The company has turned the corner. The story has shifted from fixing the business to growing the business. With a healthy core, a rock-solid balance sheet, and a clear plan to return cash to shareholders, we think the company is set up for continued success. And as always, a quick reminder, this is not financial advice. All the information we've presented here is for educational purposes only.